Hi traders, welcome to today's video. My name's Joseph. Today we're going to have a look at trading price patterns. So we're not going to be looking at actually trading them, we're just going to be looking at what are they and identifying them. So we're just having a quick look at this sheet in front of you. We're going to list some of the main reversal patterns and some of the main continuation patterns. Now this is just really a tip of the iceberg. There are a heap of different patterns, price patterns out there. So if you want to explore this topic further, definitely go online and have a good look. There's a couple of sites dedicated to them and they list a very wide array of trading patterns. So we're just going to stick to some of the more common and popular ones in today's video. But if there's any main patterns that you know of that have been missed, please go out and have a look at it into further detail. So starting up, we're going to have a look at a couple of the main reversal patterns that are in front of us here. We're starting with a double top, that's a bearish pattern, and we're starting with a double bottom, which is a bullish pattern. So a very common, well-known pattern is the head and shoulders. That's a reversal pattern. And then we can have the inverse head and shoulders, which is just the head and shoulders flips upside down, and that becomes a bullish pattern. And these are normally viewed as reversal patterns. So the market changes direction. So just skimming down to continuation patterns, we have ascending triangle and descending triangle. These are normally with trend, so that would be in a bullish trend, and that's with a bearish trend. Then we have flags and pendants, so these can be in both bullish and bearish trends. And then we drop down to your basic channel up and channel down, and we have wedges, and that's a rising wedge and that's a falling wedge. So again, they can be seen as continuation patterns, and at times these can, if they're at the top, they can also signify a reversal as well. So we're going to go over to some live charts now. Just have a look at some of them in real time, because when you're looking at them drawn like this, they look very perfect, but often when you're looking at a chart, they will not look as picture perfect as what you're seeing here. So we'll just go over to have a look. So starting with the Euro Aussie, now please forgive me if this looks pretty rough, but that's basically a rough head and shoulders pattern here. So we can see our first shoulder, our drop down to the neckline, our head, a retest down to the neckline, and a new final shoulder formed, and then a break of the neckline, and then a decline. So normally you'd be trying to look for a pattern that is a little bit cleaner than that one, but like I was saying before, they're not always perfect, and sometimes they're not going to look in really textbook, so you've got to learn how to try and spot them. And again, when you're trading your head and shoulders, you're really looking for a break of the neckline to signify that the pattern's been confirmed, and a lot of traders will even look for a test back up to the neckline break and then trade once that's been confirmed and the market declines. So again, on this chart as well, we have another pattern, that reversal pattern. We'll just have a quick look at. It's this down here. It's very small, but it still is significant. And we can see we had a very small double bottom here. So we'll just zoom in on that. So this is a very small example, but it's still valid. So we had the market come down to this point. It rallied up, it came back down and tested that point. Then the decline stopped for a second time, and then the market broke out and also broke trend. And then this is a pretty good example. We had a pretty nice rally out of that. So what we're looking for with a double bottom is just, or a double top, is just when the market has tested a point twice, failed to break, and then reversed. And that's your double bottom or your double top. So we'll have a look over at the Kiwi Swiss. We can see here an example of a descending triangle. So we have the support point, and we have a number of lower highs forming that downward angle. It's in the direction of the current trend, which is a downtrend, and then we can see it's been broken and we've had a move down. So that's a descending triangle. So they're normally seen in declining trends. And we'll go over to the pound Kiwi, and we can see on the pound Kiwi we've got a bit of a wedge here. So the market's broken up, it's consolidated. You could also call this a pennant or a flag if you wanted to, but the main thing is that you see it. You see the market is consolidating, and then we had a breakout, and then the market continue higher. So that's the key here, is that you're looking for consolidations. They're going to be a continuation higher. So as long as you identify it, and then you're able to take advantage of that once it's confirmed, that's the main aim of the exercise. So we'll move over to the Swiss yen, and we can see here again we've got a bit of a downward channel, and we've had our move up, consolidated, formed the channel, and then we've had our breakout and our extension higher. So I hope after looking at some of those real-time examples that you can see that they're not always going to be perfect. You do need to not really be creative, but you do need to be a little bit more flexible when looking at the actual price data. When looking at a line chart, it can make it a lot easier to identify the patterns themselves. They become a lot more clearer, but the issue with line charts is you're missing quite a bit of the story, as you're only seeing the close price. You're not seeing the highs and lows that were made in each particular bar or candle, and that can be a bit problematic for when you're placing stop losses and take profits. So the best thing to do is just try and train your eyes to become accustomed to picking them and seeing them from the bar chart or from a candle. If you use a line chart already, that's fantastic. That would be even easier. So just quickly, we can see a small double top here. It did break and make a new low, but it reversed. So as with everything in trading, nothing's set or guaranteed, so you need to also manage your risk and have an exit plan for every position you take, just in case the position you've taken turns against you and the pattern fails, because at times patterns will fail. Even if you wait for them to be confirmed and then take what looks like a great breakout, they can reverse on you and then end up not working out. So I hope you found that video helpful. If you have any questions or need any help while trading with us, feel free to contact support, and we'll wish you all the best for your trading week. Thanks very much. Bye for now.